Good afternoon, Jimmy. How are you feeling today, Jimmy?
I'm good, thank you, Amen. It's a good Sunday.
Is it raining over your side?
It's about to rain, thanks.
Oh, okay. So good afternoon, everyone. Welcome. So this is our Sunday edition of Investing Bro Market Talk, episode 20. Time really flies. So this is where myself and Jimmy we actually share on what happened last week, and of course prepare ourselves for the weeks ahead. Now, so in fact, this weather is very apt. It's in line with our topic today. Our topic today is dark cloud is definitely forming in the market. So for those who are very bullish or has been enjoying the bull run over the past 1-2 months, I'm sorry. Well, I don't have a very good news for you. So, yep. I'll probably just shoot off what I have to share first, and of course, I pass on to Jimmy to have his point of view. Okay, let me just share my screen. Okay, so why do I say that there's actually a lot of dark clouds in the market today? So let's start with what is already happening. Inflation. Okay, so even at the beginning of the year, in fact, at the end of last year, we are talking about very high inflation rate from a US side. And even on the Singapore end, we see that things are getting more and more expensive. Simple things like your eggs, your groceries. So actually all this, it does add up. It's actually sign of inflation is really happening. So of course, all the time we should expect inflation. So now the issue is inflation is happening too fast. This is generally bad because it disrupts the supply chain and it may actually price out certain demand. Okay, so from the company perspective or business perspective, this is definitely not good. At the same time, with inflation, one way to curb inflation is to increase the interest rates, which is already has happened. So this already has happened, and it's already a known fact that it's going to happen a lot more. In fact, if I remember the numbers correctly, at least 4 or 5 times more within this year. If you actually go and study Economics 101, increase in interest rates basically slow down the economy, and again, not very good for the market, not very good for the stock market. Obviously, if economy slow down, you expect the market to also slow down to come over. So these are some of the dark clouds, that is quite obvious that's happening. Another one, which is this one again, I think everybody knows about it. Russia and Ukraine is in war, but the issue now here is this. Apparently, now it's a known fact that this war is not going to end quickly. So even though Russia has sort of moved the troops away from Kyiv, the main city, but there is still no ends in sight. And some analysts even say that the war can drag into months and even into years. So this actually going to add a lot more salt into the current world situations. Okay, so obviously Russia and Ukraine, they are some of the world's largest exporter for certain commodities. And given high inflation rate, given that the war disrupts some of these exports, is going to make a lot matter worse. Prices increases, and again, put a strain on the stock market. Okay, the other thing which is brewing, we may not really feel the impact yet, but we can really sense as it's coming. So China has still maintained the zero COVID policy. And with that, now we have a Shanghai lockdown. And as per what this article is suggesting, this lockdown actually is disrupting the supply chain. Okay, we are talking about world busiest ports and China's supply chain disrupted. So again, tons of dark clouds and yes, on a rainy afternoon. And this is really what we want to share today. And why we thought that we actually want to share at this juncture is actually because for the past, in fact, 1-2 months, we had a very good run, okay, especially in the Singapore market. We just want to make sure, hey, people don't just get overexcited, think it's time to party, since I to go in. At the end of the day, as a FA, fundamental analyst, we believe that the stock market is always correlated to the actual economic performance. In fact, this is the time which at least myself is actually going to be very cautious. Okay, so this is what you see on the news. Now, the part that really got me worried is the numbers seems to be telling the same story. Okay, what you are seeing here is the United States unemployment rate, US unemployment rate. So obviously, unemployment rate, the lower the better, okay, which is coming down for US as you can see. So by right, we should be happy, right? The US unemployment rate is low, but this is only for US. I'm not sure if you actually see a very distinct trend for the US market now. Okay, if you look at it carefully, every time it actually goes down, unemployment go down, it will pop up. Can you see? Goes down, then after that it will pop up. Goes down, it will pop up. So it has been happening so many times, and my hunch is that I don't see how this pattern can be broken. And given that now the unemployment rate has go down, if you ask me if history is a guide, I do sense that a pop-up is imminent. Unemployment pop-up is imminent or coming soon. And what does a pop-up means? Pop-up actually means that, either there is some financial crisis or economic crisis. Take, for example, this one, the last one, this was COVID. The one before this is 2008, the subprime crisis, so on and so forth. So basically, I don't like what I see the numbers here. And then I think it actually sort of like ties in with all the black clouds that I've been observing. On the China side, again, not very rosy picture. So with the lockdowns, you see unemployment going up. Okay, so definitely not a good sign. And yep, again, this is why we really want to do this video. I think it's time for people to be cautious. Okay, don't get so over bullish. We shouldn't ignore all these signs or dark clouds that, hey, market may not be very exciting very soon. Now, Jimmy, possible to you. So do you agree with what I said, or do you have anything to show further, Jimmy?
Yes, I do agree with you. I mean, with the Shanghai Lockdown, which is the so-called the latest event going on in the world, it's definitely going to affect the supply chain. So personally, I see that in the next few months or so, some of the products that we use, consumer products that we use, that will require components and precision components from the Zhejiang region, all these is going to be affected. And, so there will be supply chain disruptions, and that indirectly will affect some of the companies in Singapore that has dealing with such kind of service or product, and that will actually indirectly affect their earnings in the next 1 quarter or 2 or so. But nonetheless, I'm going to show you something which is more on a technical analysis in terms of how I see, Straits Time Index. And so this is what I have. This is what I have. And you can see that over here, Straits Time, the STI has sort of like, went all the way up from 3001 to 3452, after the war has started. And then right now he has reached the top and coming on the way down. So it actually forms what we call a double top. And right now the resistance, or rather the support line, is over here, which is about 3296, let's say 3300, right? 3003. If STI will fall below 3003, that will mean that it's going to be a bear. But for now, the immediate is to ensure that, or rather we want to see that the STI will bounce off from 3342, which is the MA50. And if it's continued to sideline, that's fine. But if it falls below 3300, which is only approximately about 80 points from here, then it's something that we need to watch. So right now, the chart doesn't look very good, as you can see from here. And let's see the actions for the coming week. Thank you, Ian.
Thank you so much, Jimmy. So it looks like Wow, very interesting period right now. So all the signs are seems to be pointing in one direction. So of course, I think a more important question we should answer here is this. So what should we do? So is it time to sell away everything you have, keep cash or what? Okay, so I just want to share my point of view. Of course, I'll get Jimmy to share his later. So personally, I think a lot depends on your investment objective, investment strategy. So I see myself very clearly. I'm an investor. Investor in the sense that I'm building a portfolio. I am not a trader. So in this case, what I do here is this, I will actually look at my portfolio and I see if there's any stocks that are considered overvalued. Okay, I will only sell stocks that are actually overvalued. So especially for those that are actually still giving me good dividends, I will still be keeping them. Okay, because while I'm an investor, I'm actually here to create portfolio for dividends. So I'm not a trader. So be very clear. Don't try to be investor and trader at the same time. Very dangerous. So this is one. I only sell stocks that overvalue. Now, the other thing that I am very focused on doing now is to keep some cash, or either that make sure I have increased my cash portion, so that if let's say we are correct, indeed the market drop, I have some ammunition, okay, to buy in stocks at a lower price. So this is at least what I'm going to do over the next 2 to 3 weeks. Keep cash. Or if let's say, for example, no other source that I have to sell, yes, I do actually sell, but the purpose not so much to take profit, but to keep cash in case we are right and we can actually buy more. And Jimmy, good to hear from you. So I know you are into a lot of high growth instrument, including crypto. So what are you going to do about it at this point in time?
As for crypto right now, if you look at Bitcoin, I mean, I'm talking about Bitcoin because it has the largest market cap, so we use that as a reference. BTC has sort of like fell through the 45,000 mark, and then since then it has been going all the way down to, I think, currently trading at about 42. So the point to watch is actually the support point is around 40,000, and that's basically the support line. And if it's going to bounce off from there, that's fine. If it is not, then it break through, then we may be seeing a huge bear going forward, which is pretty much similar to the STI scenario, which I just mentioned earlier on. So right now, trading at 42, we are seeing that it is still downtrend, unfortunately. And we are going to watch this week and whether the direction will still, going by the sideline. The upper limit for this Bitcoin is at 45. So if it's between 42 to 44 kind of a range, then we'll be quite safe. But if it is something, as I say, break through the 40, then that is something that you all have to watch too. So the crypto market doesn't look as bullish as it was 2 weeks ago. So unfortunately, that's how the market is going to be. Yeah.
So I see that you'll be selling some of them to keep some cash as well.
Yes, I do. I mean, I've been selling quite a bit of growth stocks. I mean, stocks in particular, I sold some of the high growth stuff that has been made over the last 2 weeks, and then keep some. But of course, on the long term, I still do. For those who know me, I actually do a lot of DCA on ETF. And so I'm okay with that, because with the market down, I will just simply buy more units. So that's basically my strategy at the moment. Yeah.
Okay, great. So thank you so much. So this is what we have to say. So again, hopefully this video is timely. Of course, feel free, don't have to agree with me. We are just presenting certain facts or certain observations that we see. But then again, it never pays to be greedy in the stock market. So with that, that's all we have. Please fill in your comments in the comment section. Agree, disagree, or what do you think? Of course, feel free to have different opinions. And if you think that this video has been helpful, do us a favor, click on the like button, click on the subscribe button, click on the share button, so that more people can enjoy the content and we are motivated to do more. Okay, so take care. Have fun and see you again very soon. Investing Grow Market Talk episode 20.